We are finally back. I'm excited to be here today, catch up on the markets with my guy, Kevin. A lot to discuss, jobs, Asia, Fed, so many things going on. We'll be discussing all of that and more today on Money Never Sleeps. Thanks for joining us today, everybody. As we get going, it's been a minute, but remember, hit that like button. If you're new here, subscribe to the channel. Remember, nothing we say is financial advice, so please do your own research before making any sort of financial decision. Kev, it's good to be back with you. We've been away for, about a week and a half. Last time I was on here was with Mr. House 2 weeks ago, talking about the Fed cutting rates, and I know you've been traveling a lot, so welcome back, my friend. It's good to see you.
Thank you. Yeah, lots happened since since today. I guess getting back on the show. CZ is now a free man. All the people that I've been chasing short, and they're all walking away free. It seems, but
well, except for SPF, and Caroline. She got her sentencing and owes $10 billion. I guess SBF is now cellmates with P Diddy or some shit. Wild times out there. But we're here to navigate all of it.
Yeah, I'm sure there's going to be a lot more in the coming years of congressional testimony for a lot of companies. I won't say which ones, but if we ever do get into this financial crisis that I've been anticipating for so fucking long at this point, I think we'll start to see that there was a lot more fraud in the system, at least in some of these companies, than we expected. But right now is a very weird time. You and I were just talking about it before the show. It seems like everything is just trying to hold itself together. And I think we all kind of know that there is a lot at stake when it comes to this election season. We're only I think they were talking about it on the debate last night, 35 days away, maybe 34 days away now, which thank goodness. I can't wait to get this over with.
Just want it to be done. I'm tired of all the bullshit text messages and
yeah, man.
This morning I was thinking to myself, I'm like, I just need to get a cell number that I only give to 8 people on the planet, and I can just stop getting all this shit because I'm just so tired of it.
For me, it's just the lying, and I know that'll never stop. But just so much lying at one time, that's just it irks me a little bit. So I can't wait to get done with this political season. Hopefully. Well, I know what the outcome is either way for the U.S. economy, at least the equity market and even the global economy. But I hope that we get to a point where we have some sensible people in the room that could make sure we don't get into this situation all over again, because this would be I don't want to live in the lost decade for,
Buddy, I feel like so. That is wishful thinking right there.
I know.
I'm watching now as Bitcoin dominance is pushing back up over 58. ETH, Sol, all the alts are starting to falter here, but we've seen, let's go back to the Fed cut, because that was the last time that there was a show. We saw the markets respond favorably. We've seen increasing tension in the Middle East, which led to a bit of a sell-off in crypto. I would have expected more. We've seen, things worsening in Japan, China stepping up with more intervention to try to are saying they're going to intervene more to try to rescue their economy. Whether or not you believe that is up to you. I personally, not a big believer in what the Chinese government says. I don't know. Maybe I'm crazy. So we've seen all that happen. We've been getting more data that suggests that inflation is moving down and the job market remains resilient. I don't know if I believe the numbers that came out, the last few days. Saw the JOLTS report yesterday showed 8 million jobs available, an increase of 300,000. And then we saw private sector employment came in over expectation as well. We'll get the non-farm payrolls on Friday as well as the unemployment rate. So a lot going on. And with all the revisions we've seen every fucking month, I don't expect that those numbers are going to be particularly accurate, but they come at a convenient time with the election coming up.
100%, right? All of a sudden, it's like all these numbers are just amazing. From everything from GDP to these, jobless claims. Sorry, I can't speak today. And then it's been a while. And I'm not quoting a Stain song, but yeah, it's there's a lot that's happened since that just seems like it's a little too fucking good to be true. The good thing is we got 40,000 people on strike right now that might have some discrepancy with some of that data. And it seems like, looking across other unions, there's a lot of other unions that are starting to go on strike too. I saw some three different cities, Teamsters unions that are going on strike. And, do I understand what's going on enough to make have an opinion on it? Not necessarily, but can you kind of see what's going to happen from it? It ain't good news, guys. It's probably going to impact inflation in a way that the Fed's not going to like. And the best part about it is, when we get that next Fed rate decision, uh, are they going to take this into account? And if they don't, then we could see, inflation reignite significantly. But then you have to also understand that a lot of this manufacturing data that's coming out, and then we're starting to see a lot of the consumer data that's prior to, I would say, September, which has been fairly bearish data. We're just going to see a point where what seeing is just deflation. People aren't buying necessarily anything that's causing the economy to slow down a lot faster than they probably expect. I think that's a very likely scenario, but we don't necessarily know until we get to that point. Again, it doesn't help that we don't have data that is 100% accurate, and we won't know it's accurate until we get those revisions. But right now, it's just such a turbulent place to kind of believe any of that stuff at face value.
Yeah, we also, so you were mentioning the strike going on with, all the people that work at the dock or the, what are their names?
Ports.
Yeah, work at all the ports. I'm trying to remember their job title. Was it the longshoremen who work at all these ports? And that's going to affect everything on the East Coast. Like they're all under the same union. So that's going to lead to increase in prices. You see oil going up with all the tension in the Middle East. That could increase, lead to increased prices and more inflation. So it's just a really weird time. And the market has remained resilient in the face of all of that. And I wouldn't be, we're still very close to TradFi being at all-time highs. Like we're not that far off for the NASDAQ. The S&P is 50 points off of its all-time high with, all of this going on in the Middle East. So I don't get it. And maybe I've just been too bearish for too long. My plan, my thesis has not changed, but it's hard for me to wrap my head around all of the struggles going on right now, all of the issues like globally, and the fact that the markets are still so close to their all-time highs. It doesn't add up.
It's absolutely.
Consumers are still in the fucking toilet. All-time high U.S. debt, so that's fun. Over 1.14 trillion now in household debt, so that's good. Interest rates will come down, but with this the jobs data that's come out the last couple of days, now the expectation is a 25 basis point cut in November. We don't get one till the middle of November, and then one again in mid-December. So, we're looking at probably 50 basis points for the rest of the year. That's still going to keep credit card rates high. That's still going to keep people from, being able to like buy homes and purchase all sorts of things. So it's a really just strange and hard to parse through time in the market.
Yeah, and again, I don't buy this for one bit. Anything that's going on in the markets, if we were in illogical markets where they were actually free, and we didn't have interventions from central banks and some of these other institutions that are providing overnight, repos for liquidity, and we weren't also getting treasury issuance that's just creating collateral in the system that you could pretty much use as debt. We probably would have seen the crash already, and it probably would have came in March of 2023 when the banks were collapsing, right? But all the central banks, the Federal Reserves, they pretty much stepped in and they protected a lot of people from going bust. I do want to share this. This is something that happened, and the date is going to be really important here, but this is something that we saw the other day, and it seems that someone used the lender of last resort, the Federal Reserve, to borrow $2.6 billion. And obviously it's a bank. The question is, which bank is it? I have a feeling I know who it is, but I'm not going to say. I'll hint at something that maybe Warren Buffett or maybe one of the CEOs did step down yesterday, or is going to step down now. But breaking the Fed repo facility emergency liquidity has been tapped for $2.6 billion. But the date is the important thing here. I'm looking at this, the operation date, Monday, September 30th, 2024. Why is that important? It's the last day of the month. It's also the last day of the quarter, right? So someone probably had to balance their books right at the end just to make sure that they had enough to stay solvent and make sure that everything looks good when these earnings do come out for Q3. And I don't know when earnings are coming out, probably later on this month or in November. But when we do see that, there's probably going to be some kind of discrepancy through one of these banks. If I had my personal opinion, who do I think it is? I think it's a bigger bank. I don't think it's a regional bank one bit. And the bigger banks are the ones that I have been targeting, saying that they are the ones that are in the most trouble. We saw that with Silicon Valley. We saw that with First Republic. When we looked at that sheet, it was USA Federal Savings, and it was also Charles Schwab, whose CEO did happen to announce that they were stepping down yesterday. I don't know if that's coincidence or if that's just like maybe the performance of the stock itself is causing the board to make them step down. We're also seeing that there are other institutions that are kind of in a place where you're seeing some of the biggest investors absolutely dump all their stock. One of them being Bank of America with Warren Buffett and Berkshire Hathaway just dumping a lot of that. But this is no small amount of money. $2.6 billion, that's a big loss and difference if that is what they're trying to do to balance the books. The Fed is obviously still offering stealth liquidity, and this isn't the only institution in which they're doing it. Treasury is also helping by issuing, some of the shorter term duration Treasury bonds that allow people to pretty much have liquidity in the system by taking up some of those, and then you start to see some of those sell off, and you see the value of them go up pre-market or post-market in some of the Asian hours. But that being said, there's still liquidity being pumped by these central banks that's allowing this market to be held up. And that's the thing that's really hard to navigate here. And that's why I haven't made any buys or sells. I'm still bearish on everything. I just don't necessarily know how long they're going to be able to hold this up, because it's been, since 2023 of March, it's been it's been a year and 6 months or so. So about a year and a half since we probably should have seen the major collapse, but we haven't. And that also kind of goes back to what we're seeing in China right now too. China is in a pretty much a recession. I expect them to be announcing that they are in a depression at some point. Maybe it's after everything else in the global economy goes, because then it's a little bit easier to come out and say that you're in a depression, that the entire world's in one. But when we look at this, they were the worst performing market this year. China was, right? We were looking at the Hang Seng, we were looking at the Shanghai comp, and it was just down the entire year. And now it's the best performing market of 2024. And it only took 15 days and all that stimulus that you print. But that is absolutely the last resort. You never print stimulus when you're in deflationary mode. Deflation is worse than inflation for these governments, right? Because they'd rather have people spending too much and prices getting out of control than people not spending any money whatsoever. That's problematic, right? So China being one of the world's largest economies and seeing that they're in a deflationary spiral and they're panicking by printing stimulus tells me that there's trying to get a lot of foreign investors to come back into the Chinese and Asian markets. I don't know if they are. I think that if we look at the charts of what some of these stocks are doing, it's just gap up every session. And if that's the case, then you have a lot of liquidity gaps to fill below, and people are going to make a lot of money. I think right now what we're seeing is a major short squeeze in Asia. And eventually that's going to, there's only going to be so many people that are going to cover their positions after they close those shorts, that it's going to just be like, well, no one really wants to be holding this shit up here. We're going to probably see a bit of a sell-off. That would be a logical explanation for what we are seeing right now and what would happen. But again, we don't know how long this stimulus and this liquidity is going to be provided. And again, I don't think the Bank of I can't even think of the Central Bank of China, what they're called. There's so many fucking acronyms that are running through my head right now. But I don't think that they want to be, exit liquidity for anyone else too, right? They're only going to be able to pump it so much before other people start taking profit and getting the hell out of that market. That's just some thoughts on what's going on in Asia.
All right. Let's talk about what's going on. Do you want to do a little bit of TradFi, or do you want to go into crypto?
Let's do TradFi, and then we'll finish off with crypto like we usually do. You just pull up the trading view. I haven't even looked at this in a while.
Yeah, on the day, things are pretty flat across the board. We saw a pretty nasty sell-off yesterday. as the tensions over in Israel and began to increase with Iran as well. So that was what drove the market move down yesterday. And today it's just a little bit of the dust settling, people trying to figure out what the hell is going on. We see Nvidia bouncing a little bit, pretty big sell off in Tesla, down about 3.5%, as some of their numbers came in not quite what people were expecting. Maybe this is a bit overblown, but I do see your little trend line right there pointing us to a further move down in Tesla, since it hit that double top and didn't break through. So talk me through this one, and then we can kind of go into whatever other stock you want to.
Absolutely. I'm going to actually turn off my camera right now because for some reason my internet is just being balls. So we're going to just try and get through this and see if we can get this without any freezing. But Tesla, yeah, this is a trend line that it's been, trading in since July of 2023. It keeps failing to break above it. And, if you saw a bullish break above it, but then it didn't fail to continue, it broke back underneath, you're talking about something that's extremely bearish. That's a failed bullish breakout is worse than just finding resistance continually, because there's a good chance that there's still no reason why you can't retap that trend line, right? But a failed bullish breakout is bad news, and Tesla didn't get that, so you can still kind of say that maybe there is room for another tap of this trend line. Again, I don't necessarily know how much liquidity is going into Tesla itself, but if you do look at where it is and look at some of the volumes down here, you can see that there's bearish divergence on the daily big time. You're seeing a lot of lower volumes as opposed to what you're seeing back too, because you think that once the quarter picks up, towards the end of September, you are seeing a lot more trading because summer's over, people are back in the office. You're just not seeing that. You're seeing a lot of low volume, which tells me there's very few players in this game with Tesla. And that kind of goes back to what we're seeing with Nvidia too. I'm going to pull up this. Nvidia is one that, I was kind of alluding to, of a failed bullish breakout. You didn't get it, right? You broke out and you got rejected from it, and you went straight back down into this triangle pattern, this pennant. And I'm going to tell you this right now. This is not the most bullish of setups. This is very bad to see that you didn't break out of this. You would have liked to see continuation. You would have wanted to see a higher high above 131. I mean, it only went to about 127. And this is a pretty good squeeze that we got on there, right? Jensen said that he wasn't going to sell anymore. Everyone kind of believed that. And because of that, we get that pump to about 127. But now we're at, roughly $8 shy of where we were at the high. 878 or so, and we found support right here at the bottom of this trend line. So what we're looking for comes by next Friday, right? Friday, October 11th, we should have an idea of which direction it's going. It either breaks up or breaks down. In my opinion, I think that we are probably going to break down most likely. The closer you get to this triangle, this failed bullish breakout tells me that. Also, the fact that we're seeing volumes decrease here on the daily. And, where could we end up? I think that 106 to 105 level is not necessarily a bad level of support that we could test. It doesn't mean that it can't go back up from there, right? It can go to 105 and then go to 115 and get rejected again before we continue lower. But I think that this 106, 105 level down here, I'll even pull this down just a little bit more. Yeah, do it like right there. That's good right there. I think this is a good chance where we could see Nvidia break from this channel or from this pattern. And where would that put us? That's about a $13.60 drop. It's about 11.5% dump from where we currently are. When does that happen? Like I said, you should have some kind of idea by Friday, October 11th into Monday, October 14th. And I honestly think that it would be quicker than that. You probably just see a gap down one morning, and maybe that is next week or maybe it's the week after. But it's kind of what I'm seeing across the board. I want to talk about Apple real quick.
Real quick, as we were on the subject of a CEO selling, I'm guessing you saw Michael Dell selling like $1 billion worth of his company shares.
Is his last name Dell because he's related to the Dell family? I honestly don't know.
I honestly don't have an answer for you.
Okay, it was Dell that he was selling the. Yeah, yep. Okay, it's right there at the corner. Michael Dell sold 1.22 billion. Yeah, I did see that. That wasn't suspicious by any means, right? I think he just
not a bad sign at all.
Not at all. I highly doubt that was a bad sign. Going back to innovation though, Apple. Remember when everyone was talking about Apple's going to be like this their AI and everything and their products. The Apple Vision Pro is going to be amazing, and we're just going to see Apple take off completely, and it's just going to be the best feature of app for Apple ever. And then obviously the new iPhones came out and no one's fucking buying them. Well, that was back here, guys. And that was around 160, 170 or so. Because I remember I took a short on Apple and I closed it somewhere around like 164. And then obviously a good thing I did because it fucking shot up afterwards with all this mania over their products and their tech. But Warren Buffett sold a lot of Apple right up here, and now we're kind of looking at where we are, and it's like, how long can this hold up? I mean, you're looking at this chart once again too, a failed bullish breakout. You went above it, and then now you're below it. Now let's see the stochastic RSI, still pretty overbought on the daily. It has plenty of room to come down, maybe retest it. But if we look at this also on the weekly, I wouldn't be surprised if, see, we're putting in a really dangerous pattern. It kind of looks like a pennant here. I haven't necessarily charted this, but I'm not too concerned with what we're seeing on the stochastic RSI itself, but this does seem a bit trappish in my opinion, especially if you close below that, and that we're kind of in that pattern right now. So this is still a major resistance. If we start losing this bottom trend line, then obviously, all bets are off, probably going to be coming down a lot lower to maybe even 195. From where we currently are, that is roughly about a 15% drop. And that's not necessarily a big drop when you talk about corrections in the market when you have seen such gains in the past year, right? That's pretty on par. You usually do, when in bear market, you get like what, a 20% correction or so. I'm not expecting a bear market. I'm expecting a recession or a depression of some sort. So I think that the pullback is probably going to be a lot more, especially with how concentrated tech has been and this rally to the upside for both the NASDAQ and the S&P. But there's just a lot of signs out there that are showing that there's a lot of exhaustion at the top of these moves. Everything's at all-time highs. There's a lot of panic we should be worrying about. And I do want to finish off with just the VIX because I was talking about this on Twitter before I had a chance to come back on the show today, and the VIX did break out of this pattern that I was watching. Obviously, kept on hitting it, very similar, finding resistance, finding resistance. He broke out of it, it's bullish. Stochastic RSI on the daily looks a little bit overbought, could pull back, but I do think that we are pretty close to something similar to where we were in July, say July 24th of this year, where you kind of break out and you're trading below it, and then right here on August 1st into that weekend, we got that major spike in Japan. I wouldn't be surprised if you start seeing the VIX be really, really stubborn in this area between like 20 and 30. It could go a lot faster if something were to happen, but I don't necessarily know. All I know is that we're in this breakout pattern right here. So we're either going to start forming another trend line where it's just to the downside and you keep finding resistance until you break out again, or this is the breakout and we're looking at something similar to, maybe January of 2020. Looking at something similar to January of 2018, September 2018, we got a little bit of a break out of this smaller one. But this has been pretty consistent watching these triangles form. It seems like that's the way that the VIX operates. And then eventually when you do break out of them, it is pretty explosive. So this is what we're going to be watching over the next 2 weeks. I was looking at October 3rd being it. I think a lot of what happened yesterday too with Israel and Palestine, or Israel and Iran, my bad, caused a lot of that VIX to just push to the upside, and you saw that bit of a sell-off. But we'll see if they can crush it before November 5th. I don't necessarily know if we're going to see it spike before then or not. In a logical world, we probably would, but who knows at this point.
Let's transition over to Bitcoin. We're seeing it on its way down, approaching 60K again. The volatility in the stochastic RSI has been just whipsawing, like just in a matter of days, going from overbought to oversold, oversold to overbought. Really pretty intense on that end. And we're seeing, lowest price in 2 weeks, Kevin. So everyone needs to panic and start selling everything. Also a trend line forming right there, that megaphone pattern that you were discussing previously. We're not seeing the levels that we did like February of 2022, right? When the war in Ukraine started. And I think that there's still a little, with how many of these like scares we've had in the Middle East, I think people are less affected by it still to some extent, but volatility hasn't been there quite as much as less familiar places. So what are you seeing when it comes to Bitcoin? where you think it's going to move. I'm assuming you're bearish on it in the short term for years. So
Yeah.
you give me your thoughts.
I'm completely bearish on it, but I think that we are going to probably see this level that we're currently at right now. It seems to me that the stochastic RSI just whipsawing, like you were saying, back and forth, shows you that there's not necessarily a lot of strength in one direction or the other for the market. There's just a range, and that kind of screams distribution, right? People who are making these trades that are maybe trying to get out a little bit higher. I don't necessarily think you're seeing accumulation up here. I think this is probably the stupidest place for accumulation, especially for when you look at institutions. I think a lot of them are moving the cash, but that's why you're seeing a lot of this volatility. There is still some liquidity that is pulling into this. I haven't been keeping up with stable coins or anything like that, so I'm not going to say that it's one or the other. I still think financial institutions, obviously, and the ETFs do play a part in this, but it seems like Bitcoin has gotten fairly boring in this range, in this megaphone pattern. I don't even know if this is a megaphone pattern anymore. This is just boring chop, really, and it's just kind of hitting the support and resistance. Where do I think that we could go? I think we can get maybe a bit of a double top here if we do find support here at this $60,000 level or so. Obviously we're a little bit below the support line that I had drawn at 60,900, 61,000. I could see us going to maybe about like this range here, maybe 66 to 68K, maybe one last little bull trap before we start to see a move to the downside. And that kind of lines up with the stochastic RSI, right? Like there's plenty of room to the upside now on the daily. So maybe we get like a short-term little rally that goes up there, and then that might be it. And then we could start to see maybe some of this pattern start to break down from here. I'm not necessarily convinced that Bitcoin is going to go break above the 68K, though. I don't think we're going to see a bullish breakout unless it's a bullish failed breakout and we come back into it. It just seems like there's a lot of problems across multiple sectors with liquidity and also just kind of volume that doesn't necessarily tell me that there's going to be great strength behind any move to the upside. I feel like this dull market kind of lends itself to maybe volatility being more to the downside, if anything, some of those violent moves. We also know that Bitcoin's dominance, like you said, is getting closer to that 58 level once again. Could that little rally to 66, 68K kind of bring us closer to that 60% Bitcoin dominance? Possibly. And what would that entail? Well, it probably means that alts would bleed a lot more once again. Looking at total 3, let me see if it pulls up. It seems like we're just continuing this trend to the downside, these little rallies, but then we got plenty of room to the downside here. It's got a little bit of a trend line here too. So I mean, you break that, then you're probably coming down more than 480 billion or so. And below this level of support right here, you're probably looking a lot lower, probably somewhere in the range of like shy of 400 billion to even our $300 billion mark, which is one of our levels that we had talked about for a while. So it's a very, very much compressed and tight market where there is no volume, but it just seems like neither side wants to give in. And I think, again, this is purely seasonal, given that we have the election coming up too. And we know that there is a lot of liquidity issues. And I don't necessarily think people want to start a fire sale on any of these assets, because once we get one, it leads to many others. I think that we are just in a very bad limbo for crypto. It hasn't been fun. It has not been fun, and it's been fairly boring, especially with this range that we've been trading in. You look at ETH. I haven't been looking at this one too much, but that's not strength when you see Bitcoin climbing and ETH dropping, right? It tells me that alts are still in a very much bearish downtrend. And as of right now, nothing's changed in the ETH front. I mean, ETH had to broke in June north of 4,100. It didn't. And where we are currently, we're halfway through the end of this C wave. So I would expect closer to the bottom of the C wave is the capitulation, meaning that we would probably see some type of event that causes a major sell-off in crypto, with Bitcoin dominance continuing to rise, and then also us being so far away from this trend line, which tells us that the height has been put in. Obviously, the height's been put in March of 2024. The height was put in November 2021. Obviously, April of 2021. Like, this bottom of this trend line tells you the height of Bitcoin in the market, and this kind of tells you the top line, the bottom of the market. We're getting away from this trend line here, and there's plenty of room to the upside. So I do think that kind of coincides with that the ABC corrective pattern that we've been kind of watching ETH play out this entire bear market since 2022. And that might also be the same situation for a lot of these other alts too.
I'm ready for it to be fun again. This is, you know, I'm not a meme coin guy. Not my strong suit. I did miss out on Moo Dang. That was a tough one. That cute little hippo, man. I could have made my nut from that cute little hippo, and I just didn't do it.
I will say this though. Given everything that's going on too, you'll probably see a lot of bull traps, and I think the biggest bull trap that we're probably going to see is oil. Just given the port situation and also the conflict in the Middle East, I wouldn't be surprised if oil does have a really good spike to the upside, but then shortly after, it's very similar to what we saw in July of 2008, where it hit like 130, 140 or something like that. And then next thing you know, it's at 35 by Christmas time. I'm just saying that's a very real possibility. It really comes down to demands on the consumer side. And we know that the consumers are tapped, but I think that we are going to see a lot of these panic scam wicks up and then break down, just like we're seeing in Asia as well. Yeah, just some thoughts. I think it's very easy to get caught up in thinking that like, oh, everything's going to be okay if Trump gets elected, or everything's going to be okay if Kamala gets elected. I don't think it really fucking matters at this point. I think it's just a matter of timing. And once this thing gets out of the way, the markets can kind of either sell the news or just, I don't even know if they'll even have a chance to sell the news. I think they're just going to drop, to be honest.
All right. That's going to wrap it up for today. We'll be back on Friday to take on the latest in the markets, the jobs report, unemployment numbers, all of that good stuff. If you haven't yet, hit that like button, subscribe to the channel, drop a comment. We'll be back, like I said, Friday afternoon, same time, same place. Appreciate everybody for being here with us. It's good to be back. Have a safe day, everybody. Stay safe in the markets, everybody. Have a great day.
Later on. Take care.